So sorry, I'm going to start again for those in the chamber. Apologies for those online. Welcome everybody to the Audit Committee being held today on Tuesday the 26th of September. It's now 6:30. We have in the room Councillor Gilbert, Councillor Laudette Scott, Councillor Zoe Gilbert and Councillor Gordon, and online we have Councillor Sophie Conway, and we will be shortly joined by Councillor Chapman. He's given us some apologies for lateness. So we're going to go into apologies for absence. We obviously just want to welcome those that are viewing online as well, and also for our officers online as well. I can see we've got Suresh and we've got Tom from Mazars, and we've got Mizur, and we've also got the lovely Mario who's guiding us tonight as well in case there's any IT issues. And on that note, we are mindful that the council is experiencing a breakdown in Wi-Fi, but we've been ably assisted with dongles, which I haven't heard that term for a long time. We've also got Councillor Salmon, which is great. So it's great to have everybody here, but we intend for the meeting to be as short as needed. So hopefully we can get through. So first of all, Mark, who's next to me, Mark Agnew's ably assisting me. Apologies for absence. We've not had anything formally, but obviously we've got councillors that are joining remotely, and as people are aware, due to the government guidance, even whilst people are joining remotely, they will be listed as present, but obviously it's not seen as being physically in the chamber. And as I said, Councillor Chapman, our Cabinet Lead for Finance, hopes to be able to attend the meeting as well. So my second agenda item is declarations of interest. Does anybody have any declarations of interest that they need to declare? And so we'll swiftly move on to item 3, which is the Auditor's Annual Report, which is pages 9 to 36 within the papers. And essentially the recommendations in the committee is that the Audit Committee is recommended to note the context of this report. So I'll hand over to Jackie to sort of run us through. Actually, on that note, can I just welcome Jackie, because obviously this is the first Audit Committee in your new role. We're obviously, you stood on the shoulders of giants, and I'm feeling very safe in your hands as the new Director of Finance. So congratulations on your role, and it's lovely to see you in this position. But we know you from the FIG before, but I wanted to fully put that on record. So thank you, Jackie.
Thank you, and appreciated, Chair. Thank you. So unfortunately, we have to do a bit of time travel this evening because we've got 3 years of accounts that we're talking about. So the first one is the really good news, and it's in relation to the 2021 year of accounts. So we've been updating Audit Committee on the progress on this audit for a number of audit committees, but we finally got the opinion on the accounts in July, shortly after the last audit committee. And I'm pleased to say that we got an unqualified opinion from our external auditors, Mazars, and no significant matters on our value for money assessment. But I think at that point, I'll hand over to Suresh. Are you going to take us through this report from the external perspective?
Yep, that's fine. Good evening, members, and apologies for Tom and I not being physically with you. We were sitting on the central line platform for about 25 minutes before we decided it was probably not going to work. So we've walked back to the offices where we are now. So apologies for that. But in terms of this paper, this is largely a kind of formality because it essentially reports to you what as Jackie's already said, what we've been reporting to you over the course of, seems like it has been 2 years, hasn't it? In terms of the audit of the 2021 accounts. The only thing that would be new in there is the value for money commentary, which is on section 3 of the report, and that is a new requirement under the National Audit Office Code of Audit Practice, and essentially feeds back to you our view on the arrangements that you have to secure economy, efficiency, and effectiveness in those 3 areas that we are required to consider. No, hopefully there's no surprises in that commentary. That has been agreed in detail with officers, but members might have a word or two in terms of what we've written there. But aside from that, as Jackie said, this report concludes the audit of 2021. We've also included the audit certificate, which is again another formality in terms of concluding the audit. And if you remember, there was an outstanding objection from prior years, which was prevented us from issuing a certificate. So that has now been done for the all the old years that were still open. So that's again another good position for the council to be in. I'll stop there, Chair. I'm happy to take any questions.
Thanks, Suresh, and I'm sure we'll do a collective thank you for all your help in supporting the borough with the accounts. But I'll go to members if anyone's got anything particular they want to talk about in regard to the 2020-21 Auditor's Annual Report. Okay, thank you, Suresh. We'll move on to item 4, which is the progress report on the 21-22 accounts, pages 37 to 50. Again, I'll hand over to Jackie, and again, the Audit Committee. Oh, let me just go back. Just going back to item 3, can the Audit Committee recommend to note the contents of the Auditor's Annual Report for 2020-21? Yeah, noted. And then again, for the progress report 21-22 accounts, the Audit Committee has also recommended to note the contents of the report. And I'll hand over again over to Jackie for a progress report on that.
Thank you. So we move on to 21-22 and the audit accounts for that year. Now this audit is nearly substantially complete. As audit committees members might remember, this audit was held up. It's almost like it was a casualty of the delay on the previous year's audit, because the fact that we had a delay on the previous year's audit meant information. We had new information on the pension fund triennial valuation, which meant the auditors needed to do some more work in that respect. So this report just gives you a brief progress update on where we are in relation to that audit. I think on this one we are expecting the audit opinion very soon, but I'm sure Suresh can update us on that a little bit further.
Yeah, thanks, Jackie. Yeah, we'll probably share the disappointment of both officers and I suspect members in terms of not being able to report that we have signed off 21-22, because we are almost there. As Jackie mentioned, obviously the impact of various national issues have then fed into the last national issue, which is around the pensions. We've completed part of that extra work that we had to do. One was at the part we have completed this testing a sample of the membership data that was submitted to the actuary by the council, and that all went fine. The second bit, which is the bit we're just trying to conclude with the support of the fund, is around what we call completeness of that data, and it's slightly complicated with you because you've got a live pensions administration system. So essentially, we're looking for some assurance that the data that the councils have submitted back in earlier this year to support the actual triennial valuation is the complete data, and we've got some further discussions with both the fund officers and the systems administrator for your pension fund later this week. So we are hoping to get this all wrapped up as soon as possible, and once we've finished that final bit of testing, we can then just run through those final closure procedures that we've listed in the progress report in terms of our final review procedures, events after the reporting period, etc., etc. The only thing that we won't be able to conclude on is the whole of government accounts, and that's because the National Audit Office has still not selected its sample components. So whilst we will be able to issue the audit opinion for 21-22 very shortly, we won't be able to certify completion of the audit. And I should say, on the value for money side, similar to the commentary that you've just seen in the auditor's annual report for 2021, there'll be an updated version for 21-22. Again, I'll stop there. I'm happy to take any questions.
Thanks very much. And again, I can go to members. I can see Councillor Gordon, Councillor Garbutt, and Councillor Gilbert.
Thanks very much, Jackie and Suresh, for that report. I mean, obviously it's reassuring that we're making progress. I'm not handling my microphone very well, am I? But just really, obviously there are still some delays. I do understand this is a national picture. I just wonder whether you can give us a bit of sort of context where we are in relation to other local authorities, and whether they're dealing with sort of similar issues. I mean, obviously we are, you know, as members of the Audit Committee, it's our responsibility to oversee this process. So, you know, I would really like to have that information. Thank you.
Suresh, do you want to answer them in a block of 3?
I can take that one now if you want, Chair.
Oh, you can answer that one. Yeah, that's whatever's easiest for you.
So So thank you for the question, and it's a good one to ask. So we also audit 4 of the London boroughs, and the majority of those are in exactly the same boat as you are for exactly the same reasons. There is one of those that has got some technical issues to its accounts, which are also delaying things. But by and large, up and down the country, most local authorities have still got 21-22 accounts to be concluded, largely due to the national issues that you have heard about for the last few meetings. So yeah, so you're in amongst the rest of the local authorities.
Great, thanks. And Jackie wants to come in as well. Thank you.
Yeah, I think it's just worth saying from the local authority perspective and from discussions I've had with my colleagues, I do think that yes, we are in the pack, but I do think we're edging in terms of progress, edging towards the front end of the pack, I would suggest, Suresh. And I know we're on at you all the time to make sure that we get those accounts over the line. So I'm sure you'd want to make sure that happens certainly in the next month, next 6 weeks, in relation to 21-22 at least, subject to the tests you need to carry out.
Suresh, do you want to come back on that?
I'm sorry, so I don't know. Yeah, I'd probably agree with Jackie there. Like I say, 21-22, we should be able to sign that off in very, very shortly. And actually, we'll talk about 22-23 in a second. But again, we've already started that audit. So Jackie's probably right that there's a number of local authorities in London who haven't started 22-23 yet.
Great, thanks, Suresh, and thank you, Jackie, as well for that comment. That's very assuring to know. And Gilbert, Councillor Gilbert.
Thank you, Chair, and Jackie, and everyone involved, and Mazas and Suresh, and everyone, the whole team there. Yeah, it was really sort of. I was going to ask what Councillor Gordon asked, in fact, but I'm just wondering if is it a case, because you mentioned you were kind of up at the top of the queue, but is it a case of the local authorities that speak the loudest and push for this that gets us to the top of the queue, or how does that work? Because I know there was a concern, there has been a concern about the audits coming basically when they should, and they haven't been coming when they should be coming basically. So how does that work? Is it a case of we shout loudest, we get to the top of the queue?
No, it's not about shouting the loudest. Part of the consideration we make when we are scheduling audits is the council's ability to actually service the audit. So if you are able to demonstrate that you can support our audit by providing good quality working papers, responding to our audit queries effectively and promptly, then you're more likely to have your audit earlier in the schedule than some other authorities where we've agreed that they need more time to make sure that all their working papers are complete before we commence the audit. So obviously then it's also a consideration of our own resources in terms of, we try to give you some continuity in terms of our audit teams. So that's the factor that we play into it. And given where we are with various years of audit open, clearly we're focusing on making sure that the audits that we're getting complete in terms of 21-22, we should be able to move on to 22-23 sooner rather than later. So, but first and foremost, from my perspective, it is about the kind of who can service the audit effectively, and I think your finance team have demonstrated that they can do that effectively.
Thank you for that reassurance. That's very reassuring. Thank you.
Councillor Garbett.
Thanks. Yes, it's all really helpful, and thank you for the report and all the work on this. I was just wondering, and Jackie, maybe it's what you were referring to in terms of the fact that the 2021 accounts weren't ready for this one, but on page 43, I don't know what this is of the report, the one of the audit progress, the one with the RAG ratings, it notes that the first one was materially different, which obviously is quite substantial. Is that based on that? Because of that bit of information. Yeah.
So that's in relation to triennial revaluation, I believe. Is that right? Sorry, I haven't quite got to the page.
Yeah, it is page 43. You're right.
Yeah. So that was the precise thing I said about the timing. So effectively, that because we got past the end of the financial year and the previous year wasn't signed off, and there was substantial change in relation to that issue, then we had to redo the accounts and submit them again for further testing.
Yeah, and then obviously we're going to get to 22, 23, but it's probably just going to be a knock-on effect, isn't it, to come.
Great, thank you everyone. That was really good questions that were asked there in terms of trying to draw it out. So just on that, we are recommended to note the contents of the report, or the progress report in 2021-22. Noted. Okay, thank you. And we'll move on to item 5, the agenda, which is the draft statement of accounts for 2022-23. Members, this is in pages 51 to 254 within your pack. And the recommendations for the Audit Committee is to approve the Council's 2022 Statement of Accounts, obviously subject to the finalisation of the audit process, and consider and approve in its own right the annual governance statement contained within the Statement of Accounts. So again, I'll hand over to Jackie.
Thank you, Chair. And I think it's worth noting here as well, we spoke previously about where we were in the pack in relation to the accounts. Well, the accounts deadline in terms of producing a draft statement of accounts moved back towards the 31st of May this year for the first time since pre-COVID, when the deadlines were flexed a bit, and Hackney was one of only 8 councils in London that managed to produce their draft accounts on time, published on time. That's largely thanks to Ms. who's on the call and the team, so that was really good news. In terms of this report, we'd normally have a third recommendation on this in relation to delegating the authority to myself to sign off the final set of accounts, but because the audit isn't significantly underway at this stage, it started and it's underway, but it's not significantly progressed, that we didn't feel it was right to make that recommendation today. So we would expect a further update in relation to 22-23 accounts at the next Audit Committee. In relation to what's in the report itself, the report provides an overview of the statement of accounts, running through all the main statements and trying to set out for members the purpose of each of these statements, recognising that some of it can be quite jargonistic. So we've tried to make it as plain English as possible in the report, but the accounts themselves are not unfortunately, local authority accounts are not user-friendly, and they do take quite a bit of an interpretation. So really happy to take questions, and I'm sure Ms on the call would help me with any I struggle with. Thank you.
Okay, I can see Gilbert, Councillor Gilbert and Councillor Garbett.
Thank you, Chair. Just on page 53, 9.3, you talk about while the accounts do not reflect any contingent assets, it's worth noting the presence of a contingent liability. Specifically, there exists a potential liability of approximately 600,000 related to care costs stemming from a historical ordinary residence dispute. This legal matter involves several local authorities, and it is anticipated that it will be escalated to the Secretary of State for a conclusive determination regarding which authority assumes responsibility for these expenses. Is this a problem, and when do you reckon this may be resolved?
I'm not going to attempt to answer that question for you. Because it's quite a small amount. I wouldn't want to give you the wrong information. So if we could come back to you on that, I'm sure, unless Ms has got the answer, but bear in mind it's a relatively low amount. I think we might have to come back to you on that one. Yeah, if that's okay.
I'm happy with that. So, Councillor Garbett, sorry.
So I was just checking if Councillor Smith had any more questions, because obviously this is a massive, really massive report, and I do appreciate what you've said about trying to make it as accessible as possible, because I do really appreciate the summaries at the beginning and all the glossary at the end. So I remembered the glossary at the end last time, because the first time I read one of these, I found it at the end after trying to read the report. But I know now. So yeah, just a couple of questions. One was, I know there's a description, so this is page 54 on the pension fund. I know there's a description about why it decreased by 93 million, like 5%, but I just wondered if we could have a bit more detail or hear you speak to that, like if that was that's 12.2, so just about the pension fund decreasing by 9. So it's on 54 of the full, of the full pack. 12.2. So just, I know it describes here the impacts of the kind of stock market investments and stuff, but I just wanted to hear you speak about it in a bit more detail if possible. And then the other one was on this is significant governance issues that are mentioned in 13.7 on page 55. And I think the similar things are mentioned on 79. I just mentioned some governance issues. So just wondered if, how significant they are and if it's something to worry about. So 12.2 and then 13.7.
So in relation to 12.2 and the pension fund, that is very much, as you said, it's a decrease in the value of assets held year on year. But it's also worth mentioning that when we did the triennial valuation as at that date, that the pension fund was fully funded. So we have had over 100% funded in terms of the assets to our liabilities. So that's relatively good news. And I think the Pensions Committee last week actually had gone up even further in terms of as at the end of June this year. So it was sort of at the mercy of the markets to a certain extent, but we're still over 100% funded as this point in time. That helps. And what was, sorry, the other question was on the
other question was just on the onto the next page on 55, where it's 13.7 just lists a number of significant governance issues. And I know this is kind of talking about kind of 22, 23, and I'm sure some of these things have been addressed, but just if there was anything from an audit perspective that we should be concerned about in relation to the governance.
So if you turn to page 21 of the actual accounts, which is not helpful, I know. Let me find the page on your.
This is 71 that I was.
It's around page 86 and above, actually. I think if you go through those pages, it will pick up on those governance issues and set out what the planned action is to address these. And what we do is when we undertake this exercise each year, we would go back over those issues and report progress and make sure the sort of progress has been made, but recognising in some areas, like particularly around, for example, the budget pressures, they're likely to remain in the following year, but we set out what we do in terms of monitoring and trying to address them and achieving a balanced budget going forward.
Yeah, that's really helpful, because the only question I had on that bit was that gateway process that's mentioned on page 84 of the pack 22 of the report, and whether that's made, so the gateway process is a major project delivery will robustly challenge affordability in the context of rising construction inflation. I just wondered if that gateway process, like we've seen any impact of that process?
What we tend to see from that is if a project came to that process and it wasn't affordable, we would either have to revisit the project, i.e. to undertake some value engineering on the project to bring the cost down, or look at the overall budgets and see whether we could make any environments from other projects, or we can reassess some of the assumptions made within those projects. So we would look at those and would potentially push projects back and ask the officers and project officers to go and take another look at what could be done to bring them within a sort of viable state.
Great, thank you. Thanks very much. And Councillor Smythe.
Yeah, just to follow up on the pension thing, page 54, 12.2. Just really seeking clarification. So the fund has decreased by 93 million, 5% from the previous year. Of this decrease, 116.5 million was due, but 116 is a lot more than 93. So I'm just sort of trying to work out what you mean by that. And it was due to a decrease in the value of stock market investments held by the fund. Do we have a handle on what those stock market investments were that fell? Do we know? Maybe that's not a question I should be asking in audit, I don't know. So the clarification is the funds decreased by 93 million, and then you say of this decrease 116 million, which is a lot more than 93. Does that make sense? Do you see what I'm trying to say?
I'm just going to intervene here because I can see what you said. I mean, Jackie may be able to answer this, but I would think it's more appropriate for the Pensions Committee that
Okay.
question, I would think, but you're
Okay,
welcome
thank
to
you.
respond, Jackie, if you feel.
Yeah, it's just that
Yeah.
the figures were very different, that's all.
Let me look at the figures, but in terms of your other question, in terms of the sort of the fund performance of the fund managers, that's monitored regularly by the pensions committee. So only last week we had LSIV come in to speak to us about the performance of some of their funds where they fell below benchmark. So yes, we would do that via the audit committee. I think Miz has put his hands up actually to explain the figures.
Yeah, hi Jackie. It's the 116, but then you can see if you read on, there's 23.4 million additional cash flow from contributions. So it's gone down by 116, but then we've had the inflows of the 23 million pound cash, netting it to 93 million.
Don't worry, Councillor Smythe. So if there's no more further questions, can I just, okay, one more then, Councillor.
Sorry, it's just so massive, isn't it? It's just loads of pages. This
That's what
might
running
be,
a council's like, isn't it?
no, but just, you know, like loads of things to ask questions on. So this might be in the text somewhere and I might have missed it, but on page 130 of the pack, 68 of the report, it talks about the rental income, net loss and gain. And I just wondered if that's what we were expecting. Like, what will we expect? Like the rental income from investment properties. So 2021-22 was 6 million, and then 22-23, 11 million. But I just didn't know if that was compared, you know, what will we, is there an expectation that that's kind of set against and how that compares? Does that make sense?
Yes, we would always have a budget for commercial income. I think that probably the 2 years you referred to are really sort of first year particularly impacted by COVID-19. So what we would have done is made a lot more provision in respect of commercial income that year compared to the following year. And absolutely, if I'm not much mistaken, I think that might be a year we released some of the revision, Ms, and that would be potentially impacting on those figures.
That's partly, and partly because we had one dispute which got resolved. So there was going back to 2018 where they had to pay us for a number of years.
Is that happy with? Good. Okay, so we just need to just repeat, we just need to approve the council's 2022-23 statement of accounts, as Jackie's outlined, subject to the finalisation of the audit processes, and consider and approve in its own right the annual governance statement contained within the statement of accounts. Approve? Okay, we're powering through, everybody. We're now on to agenda item 6, which is the external audit plan for 2022-23. For members in the pack, this is pages 255 to pages 322. And the audit committee is recommended to consider and note the contents of the attached reports from Mazars, the council's external auditor. Obviously, we've got colleagues from there. So does Jackie, do you want to speak on this, or does Suresh want to present
We
this?
can probably hand straight over to Suresh on this one.
And actually, I'm going to hand over straight to Tom, who's sitting to my right. So over to you, Tom.
Thank you both. Thank you, Chair. So today, if you turn to page 258 in your packs, the topics I'm going to cover, because it's quite a dense report, are the audit approach, which is in section 3, the significant risks and other key judgments in section 4, the value for money arrangements in section 5, fees in section 6, and then materiality to close it off in section 8 before moving on to the pension fund audit strategy memorandum. So the first page that I'd like you to turn to is 265, where we'll consider the audit approach. So this is in line with what you'll be used to seeing from previous years, but what I'd like to draw your attention to is that in the current year, we've had a revision to ISO 315, which means that as part of our planning procedures, there's been substantial change. This has resulted in us paying much more attention to our scoping of the significant classes of transactions, balances and disclosures. And it's brought in 5 new risk factors which we have to consider. So subjectivity, complexity, uncertainty, change, and finally susceptibility to management bias or fraud. And it also brings in a great deal more focus on our understanding of IT, particularly around our understanding of IT general controls, as well as bringing in a greater focus on controls which are relevant to the audit. And we have to do more work around the design and implementation of those controls. Most of that work's concluded or is being concluded at the moment, so we've got a couple of bits left on it, but we've more or less wrapped that up as part of our planning. If you would like to turn to page 271 next, this will be the significant risks. There's a table on it's page 15 of our report, which outlines how we assess the significant risks. We've got management override of controls, valuation of property, plant and equipment, valuation of investment properties, and the net defined benefit liability valuation. These are in line with what you'll have seen in the previous year's ACR and ASMs, but what you will notice is this year the enhanced risks around accounting estimates will have fallen out, and that's because we think that the knock-on impacts of the cyber attack have been dealt with, and there's a lot less use of accounting estimates that we can see in the statements following the re-establishment of systems post that cyber attack. So this is more in line with other councils, and none of these should be a surprise. So I'll walk you through these very briefly now. So the first risk is management override of controls, which is a mandatory significant risk on all of the audits that we perform, and that's because of the unpredictable way these overrides could occur. It's a risk because management at various levels within an organisation are in a unique position to perpetrate fraud because of their ability to manipulate accounting records and to prepare fraudulent financial statements by overriding controls. So as we've done in previous years, we will have a look at how journal entries are input into the system, look at the controls that are there, and we'll have a look at any significant transactions which are outside of the normal course of the business. And we'll do that through examining accounting estimates in the financial statements for evidence of any management bias. We'll test a sample of journals that meet certain risk criteria, which we put together during planning, and then we'll also look at any adjustments which have been recorded in the general ledger when preparing the financial statements. The second risk is property, plant and equipment valuation, which every year we look at because of the balance of property, plant and equipment. So I think there is 4.2 billion PPE, which is obviously one of the most sizable assets that there is. Because of the inherent complexity of these valuations, and there's a lot of estimation uncertainty which arises because of the market factors, this is deemed to be a significant risk as these can fluctuate and cause material misstatements very easily. So the way we address this is by reviewing the approach which the council adopts to assess the risk that the assets not subject to valuation at year end aren't materially misstated. And then we will also look at how the valuer has come to their assessment of valuation by looking at their qualifications, their objectivity and independence. We'll review the methodology that they've used, and we'll perform a sample test and look at the underlying data and assumptions that have been used. We also use our own internal expert to provide a review on the valuation process and the data thereon. The investment property valuation, again, because of the size of the investment properties, it's close to 200 million. It's material, and therefore we'll look at this in a similar way to the way we look at the PPE valuations. For the final one, it's the net defined benefit liability valuation, which, as we've discussed, is massive. So we look at the latest triennial valuation of the pension fund. We complete work over the membership data, which gives us assurance over the completeness there. The valuation of these assets makes use of discount rates, inflation rates, mortality rates, which are supposed to reflect the profile of the council's employees. But because there is a great deal of estimation associated with these factors, this leads to a significant risk. So what we do is we assess the skill, competence and experience of the fund's actuary. We'll challenge the reasonableness of those assumptions used by the actuary, and then we'll carry out a range of substantive procedures on the information and on the cash flows, which they use as part of the IS 19 valuations. What I'd like to ask you to turn to next is to page 277, which is value for money. This one will be quite brief. At the moment, from discussions with management, review of minutes, we haven't identified any significant weaknesses. That said, the planning work is ongoing at the moment and hasn't yet concluded. So it's an iterative process which will run through to the end of the audit. On page 279, we've tabled the fees for the audit and other services. I'd like to draw your attention to, when my computer stops spinning, sorry, to the code audit work. So that's the scale fee. This increased quite significantly as a result of PSAA factoring in inflationary pressures. That's not what we set. Everything else in here is in line with what we've charged in previous years. So they are scales, and it does depend on the amount of work involved. And there are sections where we've still got TBC in there, and that's because of we haven't finalised the fees from last year in 21-22, where we've used our expert in PPE and IP valuations. So once that's been established, we should have a better idea of the fee for the current year. Finally, if you can turn to page 283, we'll look at materiality. So on page 283, we've got the summary of the initial materiality thresholds. These will change over the audit depending on our continual assessment. So they may increase, they may decrease, but at the moment we're fairly confident that this will be the level they remain at. So the overall materiality for this year is 25,346K. The performance materiality is 17,742K, and the trivial threshold for errors to be reported to is 760K. So the overall materiality is based on the gross revenue expenditure. This has increased from 1.5% in the prior year to 1.8%. So that's 19.7 million to 25.3 million. And that's based on the user's understanding of materiality. The performance materiality has also increased from 60% to 70%, and that's as a result of the lower likelihood of errors that we've determined in this year's financial statements. That's because errors in previous years have been isolated to certain sections of the accounts, such as PPE and IP valuations, and have been one-off and not recurring in nature. And it's also because there's less risk coming from the cyber attack, which is where we previously lowered this to capture any potential misstatements. Finally, the triviality is based on 3%, which is in line with industry ranges, and this is the Mazars approach. So if you've got any queries on those, I'll pause now before we move on to the pension fund.
Thank you, Tom. That was very concise and very explanatory. So thank you very much. And members, Councillor Smythe. No, that's fine. Don't worry. That's what we're here.
Yeah, thank you, Tom, for that. Yeah, I'm just trying to understand the valuation of property, plant and equipment risk, because obviously it's high at both ends of the scale there. What are the implications of that risk, and how mitigate against? I presume the risk is the valuation coming down. I mean, how do you mitigate against market uncertainty? It seems to me that you can't really. So I'd just like you to speak to that a little bit, just to kind of reassure us that you know, that kind of, I mean, because when you think about property, you might be thinking about repairs of property, you might be thinking about, you know, kind of, you know, depletion of the asset in that kind of physical way. So if you could spend maybe a minute or so just talking about that, would be great. Thank you.
Yeah, no problem. So I think there are a couple of points that I'll touch on with regard to that. The first will be around how these valuations come up with an estimation. And then the second will be about the risk and mitigating and the impact that that might have on the general fund or not. So the first is PP valuations for land and buildings can be very complex. So there's a couple of ways that these will happen, but to keep it relatively simple, the market will have impact largely on build costs, which is the direct replacement cost approach that's used for the majority of PP in a council, which is used for carrying out a service. That might sound a little bit jargony, but it means over time, if you were to build a building again tomorrow, how much would it cost? And that's sort of multiplied by the floor areas, and it will give you an approximate cost for the build. There's a few other assumptions in there, but obviously that means that with inflation, costs would be higher. In terms of the market, but valuations could go up or down. But what I'd like to point out is that although this might have an impact on certain earmarked reserves, what it wouldn't do is it wouldn't have an impact on the general fund balances until those properties would be sold. So at that point, that gain or loss would then be realised, whereas with investment property, that would then flow straight onto the CIS. So I hope that answers your question in a relatively brief and understandable way.
Yeah, I think I've got a bit of a deja vu, Tom, because I think I may have asked you a similar question before, actually.
That's okay.
But thank you for that.
No worries.
Thank you to Councillor Gordon. Okay.
It's really, I was a little bit surprised to see the level of risk in terms of fraud by managers, and just wondered whether that's the sort of thing that you expect to see, whether it's always been that sort of level of risk. I mean, obviously the impact of that could be quite significant if, you know, if there was fraud by managers, but the number of, you know, mitigations that can be put in place. Now, are there any particular concerns that you have about Hackney that you didn't reference in your introduction?
There are no particular concerns that we've got with Hackney. The reason that we've got this is it's mandatory across all audits, so we have to do something about it and consider it a significant risk. But it's because of the unique position that management are in. So should controls fail, then the impact financially.
Sorry, Tom, you've gone very quiet.
Sorry. Suresh, are you? Can you hear me?
It's like a slider has gone down.
Bear with me 1 second.
Can you hear me?
It's fine online.
Yeah, I was going to say I can hear Tom.
Mario, can you speak?
Hi, Mark. Can you hear me okay?
Apologies all, I'm afraid everyone on the Google appointment has now gone quiet. It's like the volume went down. Mario, if you can say anything in chat, please do.
Councillor Gordon, if we're unable to reconnect, would you be happy to have a written response? Or
Of course, that's fine, Chair, thank
I'm
you.
just thinking if we're not able, can you check the?
Can you hear us now?
I'm going to leave the meeting from the council chamber and rejoin, so bear with me.
So for those that are watching,
Yeah.
so for those that are watching online, apologies, we've had some technical difficulties here whereby those that have joined us remotely can hear each other. So all of those that have logged in can sort of hear each other, but they can't hear us. So I think what we're going to do is we had a question from Councillor Gordon that Tom from Mazars was unable to complete his response. And Councillor Gordon, just for the record, are you quite happy to have a written response via probably the sort of coordination via Jackie as well. Our next agenda item was agenda item 7, which is any other urgent business.
Sorry, do you want to ask me to approve the?
Oh, of course, sorry. So on light of that, I know we didn't get Councillor Gordon's response. We do, for the record, just need to be recommend to consider and note the context of the external audit plan for 2022-23. Is that okay, Councillor Gilbert? Gilbert, thank you, and sorry, members, and sorry for those online that we've encountered this. We were doing extremely well given the Wi-Fi challenges that we've had today within the council. So item 7 is any other urgent business. I'm not aware of any notifications of anything of urgent business for consideration. I just wanted to, as chair, just to remind members that tomorrow at full council we will be presenting the annual report of Audit Committee and would welcome members if they wanted to have us to make some comments on that. And also just to put on record that given that we've been sort of, approving in various audit annual reports from previous years, just to put on record our thanks for those members of the council staff that are no longer with us, because obviously they contributed to getting the council to this position as well. So given that there's no any other business that we want that needs to be said, I think I'll therefore bring the meeting to a close. And we look forward to meeting everybody again at the next audit committee. So thanks very much, everybody, and hopefully we'll see you soon. Take care. Bye.
Thanks,
Thanks, Chair.